As a part of my investing project, I'm looking to invest and gain exposure to companies that operate outside of the USA. After much research, I've come up with Vanguard, FTSE Emerging Markets, UCITS ETF, ticker code VFEM. And here we're on Vanguard's website, and we will take a closer look at this ETF and give you the reasonings why I've decided to make some investments. First of all, we'll look to the overview and the objectives of this fund. It implies a passive management of indexing investment approach through physical acquisition of securities and seek to track the performance of the FTSE Emerging Index, the index. The index is comprised of large and mid-sized company stocks in emerging markets. The fund attempts to 1. Track the performance of the index by investing in a representative sample of index constituent securities. 2. Remain fully invested except in extraordinary market or political similar conditions. So, past performance of this fund. Looking at 1st of August to July 2023. We're now sitting on the 13th of August 2023. You can see it had a 7.58 gain. The previous 12-month period had a 16.94 loss. Then August 20 to July 21, 18.27 gain. And if you look at most ETFs, they follow this pattern of increases, losses, and back to increases. Then we're looking at 1st of August 2019 to July 2020, a 5.3 increase. So we've got the past performance. We'll now take a look at the portfolio data. The number of stocks held in this fund is 2030. So to gain exposure, if you had to do it all yourself, you'd have to invest in 2030 companies. The average market capitalization is 24.1 billion. The price to earnings ratio is 11.8. And when looking at buying stocks, my rule of thumb is keep it below 20. And as you can see, this is comfortably below 20 at 11.8. Another way of looking at it is it would take 11.8 years of earnings to buy the equivalent of the value of stocks, or as a proportion, 11.8 years as a proportion of the earnings to buy one stock. The price to book ratio is 2, and it's generally understood or accepted that anything under 3 represents good value. And we can look at the information here. It says the share price of a company divided the company's book value per share. Book value is the net asset value of the company as entered in its accounts, and it's typically calculated as total assets minus intangible assets such as patents, goodwill, etc., and liabilities. At a fund level, the statistic is the weighted average of the price book ratio of all the stocks in the portfolio. So that's a good average overall, which is, as I said, is good. The return on equity is 15.1%. Earnings on growth rate is 14%, and the turnover is minus 4.8%. The fund is totally invested in stocks, and the areas or countries that the fund invests in as a percentage of its total holding is 32.7% China. China's got a great deal of potential. The only overriding factor is the political situation, but I think China will, as I might say in inverted commas, behave itself, because it does need trade with the West. Then we've got India. This is a growing country, and I can see a great deal of potential there. The only thing is with India, their government structure and company and country makeup is a bit haphazard, but there's more of an, I don't really, there might be more of an entrepreneurial spirit or organisation, but it's a country of such diversification. I've been to India. They've put rockets into space, and the next thing you go and see is people going to toilet in the public, and people living in no more than shanty towns in certain areas. But that's India. Taiwan, 17.1%, Brazil 6.6%, Saudi Arabia, quite an interesting one, that they're trying to get into investments other than oil, because they suddenly realise that oil may soon will have had its day. South Africa 3.6%, Mexico 3.3%, Thailand 2.4%, Indonesia 2.3%, United Arab Emirates, Malaysia, Turkey, Qatar, Kuwait, Philippines, Chile, Greece, Hungary, Czech Republic, Colombia, Iceland, Romania, Egypt and other. So it's a good broad spectrum of countries. You've got some in Asia, a fair with Malaysia, Indonesia, Thailand, and especially India and China, but no North America. As I said, the purpose of me looking for this fund is I'm heavily invested in US companies in other funds and investments, so I need to diversify my range. So that is the countries, the exposure. This is the type of areas. 23% is technology, 22% financials. Then we go down the list in descending order: consumer, discretionary, industrials, basic materials, consumer staples, energy, telecommunications, healthcare, utilities, and real estate. Real estate being quite a minimum. The top 10 companies out of the full list is Taiwan Semiconductor Manufacturing Company, 7% of the total value of the fund. Tencent Holdings Limited, I believe that's a Chinese company, 4.16%. Alibaba Group Holdings, another Chinese one, 2.82%. Reliance Industries, 1.64%. Mutian Jinping Class B, 1.32%. Housing Development Finance Corporation, China Construction Bank, Infosys, Vale, Honhei Precision Industries, and the list goes on. So some of these companies we know, some we don't. but I'm going to sort of, just out of interest, do research on some of these to see what they do and get a greater understanding, because I think we're all North American companies we all know, like Apple and Microsoft, Facebook, General Motors, Caterpillar, but it's nice to see that there are other countries outside of the USA that may well be worth investing in, and I'll be doing that through this fund. So that's the portfolio data. Then we've got the distribution, the distribution frequency. That's when the dividends are paid out on this fund. It's quarterly, so it's 4 times a year or every 3 months. The yield as of the close on the 31st of July 2023 is 2.72%. So we're getting an income from this fund plus potential growth. So that's the general overview of the fund. Then we go to costs and minimums. If you're buying it on the Vanguard platform, you've got to invest £500 as a lump sum payment, or if you're making regular payments, you can invest £100, and the ongoing charge is quite low at 0.22%. But this fund can be bought through other platforms, and Vincent, one of my colleagues, he is going to be investing in this fund through his ISA account, Stocks and Shares ISA account, which he holds through AJ Bell. The advantage of using AJ Bell as an ISA opposed to Vanguard. Vanguard you can set up as an ISA, but you can only buy Vanguard funds, whereas AJ Bell, he can buy Vanguard funds, individual stocks and other funds. The only downside is he pays the same fees that Vanguard charge plus AJ Bell's fees, but you've got the advantage that it's in an ISA wrapper, and he has got the opportunity to buy others. But getting back to this one, this is our research carried out, and the result is we were looking to invest outside of the USA, and we've come up with, this is our best idea, and we will be investing in the Vanguard FTSE Emerging Markets UCITS ETF VFEM. Hope you found this video interesting. All comments, questions will be replied to. To help my channel, I would really appreciate if you could subscribe. It's only a question of pressing a button, but it helps my channel grow. And yeah, so that is my presentation on Vanguard FTSE Emerging Markets UCITS ETF, ticker code VFEM. Till next time, I bid you all a really successful investing adventure.